Hong Kong is set to sell as much as 10 billion Hong Kong dollars worth of inflation-linked bonds to residents from July 23rd to July 31st in an effort to help citizens preserve purchasing power. As well as this, inflation rate data for the country is just released today. So let's see what all this means for the Hong Kong economy. I'm joined on the line with AmyYuan Zhuang, Senior Analyst with Nordea Markets. Amy, let's look first to yesterday, when the Hong Kong unemployment rate remained unchanged at 3.2%. Although the labour market has stayed resilient recently, does the sluggish performance of the retail and tourism-related sectors create an uncertain outlook?
Partly. First of all, the unemployment in June, or generally during the summer, are always a little bit seasonal, but due to it's a graduation and especially if you look at the unemployment divided by age groups, then you actually see the biggest jump in unemployment rate happened to be in the age group between 15 and 19, and then between 20 and 29. So that is actually people graduating from high school, and if they don't really have a plan to go to college or have landed a job, then they will be categorized as unemployed. So that may be an kind of a seasonal pattern and a temporary phenomenon, especially at the historical pattern. But of course, this dip in the retail and tourist industries, and unfortunately, the outlook is not too bright for these industries in Hong Kong. I mean, even if we look at this trend, I mean, the mainland tourists into Hong Kong are really declining and has been declining since earlier this year. So if the political tension, or you can say conflict, continues between the mainland China and Hong Kong, then we do believe that the Hong Kongese retail and tourism sectors will continue to be hit.
Hong Kong annual inflation rate increased to 3.1% from a 3% growth in the previous month. What's your immediate reaction to the result, and how should this affect markets in the near term?
I would say that's relatively a kind of modest change. It's basically flat. It's 0.1 percentage point. And that is probably it's cost utilities and housing. That's probably because in June the commodity prices have been stabilizing and maybe a little bit. So we believe that the market impact immediately is not going to be, but especially given that the latest oil price development and the negotiation with Iran's nuclear program has resulted in a deal. So all this is probably going to lead to lower commodity prices in the coming few months and probably even years. That is going to very likely give downward pressure to inflation in Hong Kong, as in many other places. So we do believe that this kind of small increase is not going to sustain in the longer term.
And of course, Hong Kong is set to sell as much as 10 billion Hong Kong dollars of inflation-linked bonds to help citizens preserve purchasing power. How important is this move?
Yeah, well, I think first of all, to preserve the citizens' purchasing power is for a smart move and very needed in Hong Kong, because due to the kind of closer link to mainland China, the housing prices and generally, everyday consumption prices have been pushed up in Hong Kong because a lot of mainland Chinese have been traveling to Hong Kong to buy this stuff. So preserving the purchasing power is very important to keep the people happy. And of course, given that the inflation may be quite volatile, it's very dependent on commodity prices and so on. So this is quite a smart move. And well, generally on the bond market, it's fairly developed in Hong Kong, but I would say it's not that kind of popular choice among the normal citizens compared to the stock market. And in the last month or so, the Hong Kong stock market has been extremely volatile because Chinese stock market bubble and crash that we have seen in late June and early July. And that is something that is unfortunately likely to continue for a while. Probably the whole Asian markets will face some volatility in their equity markets. and that is something that could hurt the purchasing power.
Some great insight there from Nordea senior analyst AmyYuan Zhuang. For more market analysis and up-to-date news like this, make sure you keep tuning back to Dukascopy TV.